Student loans. All right, so you're going to college and you need to take out loans to pay for it. What do you need to know before you sign your name on the dotted line? Let's start with what you need to have to get a student loan. First, you're going to need to be able to complete the free application for federal student aid. It's the FAFSA report. Second, you will need a social security number or alien registration number if you're not a U.S. citizen. Third, you will need a copy of your federal income tax returns, W-2 forms, and any other records of money earned. And of course, bank statements and investment records will probably be required too. There are two types of student loans, private and federal/governmental, which there are three types of student loans loaned by the U.S. government. Direct subsidized loans, also known as Stafford loans, direct unsubsidized loans, again also known as Stafford loans, and direct plus loans. First, let's talk about direct subsidized loans. These are based on financial need and have a fixed interest rate. As long as you attend college at least half time, the loans are interest-free while in school, as well as the first 6 months after you leave school. And the repayment period starts 6 months after you leave school. As for direct unsubsidized loans, these are not based on financial need, but they also have a fixed interest rate. Unlike subsidized loans, interest accrues the minute your loan is issued, meaning it accrues when you're in school. And like subsidized loans, the repayment period starts 6 months after you leave school. And as for the last type of government loan, there are direct plus loans, aka Parent Plus or Graduate Plus. These are available to students pursuing a graduate or master's degree. In addition, they are available to parents of undergraduate students. Again, like unsubsidized loans, interest accrues the minute your loan is issued, meaning it accrues when you're in school, and they also have a fixed interest rate. And lastly, the repayment period starts 6 months after you leave school, just like the other two government loans. Now, if you can't qualify for government loans or get enough in government loans to cover your costs, you can apply for private student loans. These are lent by private corporations, not the U.S. government. They are generally more expensive and can have variable interest rates. On top of that, they cannot be consolidated with federal direct loans. Generally speaking, government loans are going to be the best loans to get because they are cheaper and have more benefits. With all that being said, before you take a loan, particularly private loans, here are some questions you should ask. Are there any loan repayment fees? Is the interest rate fixed or variable, and at what rate? If it's variable, how high can the rate rise? When do you have to begin repaying the loan, and what will the monthly payments be? What will the total cost of the loan be, including interest over the life of the loan? And are there any interest rate reductions or deferment options? Therefore, before you take out a student loan, understand everything about the loan before you sign the paperwork.